Good evening, this is Jack from Charting Markets, and this is the Bigger Picture webinar for the evening of Sunday, the 13th of April. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right, we've had some news over the weekend. Trump has exempted some items, mainly iPhones, I think, but some tech items are sorted. Elon didn't catch a break, but with cars, but on lots of other things, on the tariffs from China. This is leading to at least some strength in the futures. I'm still hoping this rally is really going to get going and deliver something impressive. Not entirely convinced by the action so far, but I think we've had one green week so far. It would be nice to see at least one more, and really, if it gets going, we could see a month or two. We will see how that goes. Meantime, I've got a double bottom here. It's not perfect, but it's not bad. I've got a target really up at the monthly pivot area 5748. On NQ, nice looking double bottom again, target around the monthly pivot area again, 19922. Looking at RTY, I've got a larger double bottom here, which is trying to break up with a target in the 2160 area. And on YM, I've got a double bottom here, which is broken up with a target again, the monthly pivot area. So really, I'm looking for tests of the monthly pivots, see how they do at the daily middle band, which we were testing some of those last week, but I'm thinking we may well get a more comprehensive test on those tomorrow. DAX and STX have been, decent moves up from the low. We don't have any obvious reversal patterns there, but we will see how it goes from here. All right, let's have a look at those on the big picture charts. Okay, looking at SPX, on the daily chart, we haven't got close to the daily middle band. I've got that now in the 55.17 area, and the high last week was only about 25 handles below that. I think I'm looking for that to be exceeded. I'm going to be keeping an eye on to see whether there is an obvious flag forms on any of these, but we'll see how that goes. On the hourly chart, we have decent little move up, not a bad looking double bottom. 15-minute chart, we've still got, I would note, an RSI 14 sell signal. We had a number of these fixed, and none of them quite made the possible near miss target, although they got on SPX, it came fairly close. I am wondering if we might see a bit more weakness from that, and at the moment, we haven't really made a convincing break to the upside, but I think we might be seeing that tomorrow. Qs, on the daily chart, we've already tested the daily middle band on the first rally. I'm thinking that probably gets another test tomorrow. On the hourly chart, declining resistance in about the same area, I think, and we'll see how that goes. 15 minutes, we've also got an RSI 14 sell signal fixed, and this one didn't get close to the possible near miss target. As I said, I am wondering whether we might see a little more weakness before more upside. But the longer this goes, the better in terms of the head and shoulder patterns that I think may be forming, because this would be the I didn't really mark it in there. Let's have a look at the SPX one. SPX, I drew in the possible neckline here, and this would be slightly down sloping, and we would be looking at a right shoulder here, and really I'd be expecting this to last a week or two. If we have a look at the weekly chart, hang on 1 second. Yeah, on the weekly chart, really, I'd like to see a couple of weeks at least, but really this took a couple of months to form, and it wouldn't be a bad thing if we saw a couple of months, as long as it didn't get carried away to the upside, unless it was going to go and retest the all-time high, which is possible, but it looks like a long shot at the moment. On Dia, again, didn't test the daily middle band. We may well get a test tomorrow. Watching to see how this develops, but again, I'm going to be watching out for possible flags, but if we're going to get any kind of a pattern, we really need to see a higher high next. Looking at the 15-minute chart, again, I've got an RSI 14 sell signal. It's probably got the closest to the possible near miss target. Looking at the IWM, hang on, bear with me. Oh, right, there it is. Okay, IWM. On the 15-minute chart, we didn't have a 15-minute RSI 14 sell signal. Nice looking double bottom. Had a try at a break up there and a big retrace. So not particularly convincing so far, but I'd like to see more effort breaking that up, or I'd like to see resistance up here near this high, just to set up what would then be a pretty obvious bear flag. In terms of the hourly chart, As I said, nice looking double bottom, not that far away from the daily middle band, although this was the furthest away at the rally last week, but definitely a potentially doable target. Looking at DAX, nice rally there. We will see how that goes. Obviously, we've long since made the double top target. Could we be forming a head and shoulders here? Potentially. Not as nice as the others, though. Nikkei saw a nice rally, wondering about a back test of the daily middle band at 35,780. Do I think there are various people talking about everything's fine now, maybe SPX hit 7,000. I think it's important to keep this in perspective. Some of the tariffs have been paused. The rest of the tariffs amount to quite a lot. And from what the Trump team is saying, this 10% is basically going to be a minimum tariff for everyone. This is going to have big implications. It's going to have big implications for the dollar. It's going to have big implications for the status of the US dollar as a reserve currency. It's going to have probably big implications on bonds. But basically, this the trade war has not been delayed. It is still basically a trade war on the world with a minimum tariff of 10%. And that 10% doesn't include the 25% on aluminium, steel, and cars. That is very, very sizable. There will be retaliations beyond the current trade war, this full trade war basically going on with China. There will be retaliations. There is going to be economic impact. It has not been cancelled. Part of it was delayed, but by no means all of it. All right, let's have a look at DX. Okay, DX, we've made a lot of progress to the downside. I called this target down here in the 100 area a while ago. I've got a target below in about the 96, 97 area. And I think we're going to be heading there soon. In the short term, we've got a 60-minute buy signal faked, and we're trying to see a little rally here. ZB, I was saying when we broke down that I'd be looking for a target in about the 104, 105 area. If this is going where I think it's going, which is the retest of the high on TNX, which we'll come to, then I would be looking for that area. We'll see how that goes. All right, looking at US dollar and TNX. TNX, we've now got a possible RSI 14 sell signal brewing, so I'm thinking we might see a bit of a retracement here and a rally on bonds. The bigger picture, what I'm looking for is this retest. When we get over this trend line here, which is currently at about the 47.8 area, I'll be looking for a retest of this high here at 49.97, and I do have a potentially very bullish setup here. Now, if we are going to see a meltdown in bonds, and I'm going to be writing a post talking about that. But one of the things I'm going to be talking about is the IHS here, which is already broken up with the target in the 8 area. That IHS was not invalidated on this move down, which just looks like a bull flag. And I would say there's foreigners hold an awful lot of bonds, and they're running out of reasons to hold them, really. They're not going to be holding them because they're the US's friends, because that appears not to mean anything at the moment. It's they're not going to hold them because they think the US is stable, because actually they don't think it is stable under Trump, who people are looking at very warily indeed. And in the event that Trump is keen to get the value of the dollar down, anyone holding those US treasuries in dollars, let's say the dollar goes down 20%, and that is a very reasonable figure to be thinking about, then of course they just take a 20% haircut straight off. They have every reason to sell, and the first ones to sell will reap the maximum benefits. Anyway, I'll be talking about that in a post, but yeah, this is a story. I was saying last year that I thought there was last November, I think I thought there was an odds-on chance of a crisis in the bond markets this year. And this is what I'm talking about. This is where basically interest rates go up to 8 or 10%, and there is a general loss of confidence in treasuries. And there are a number of good reasons for that. I'll be going through those. But anyway, watch that space. Looking at US dollar. This was the main pattern I was looking at. We formed, I was calling this rally back in mid-23, and we saw it, and it went up through my initial targets. So I was talking about this being a flag, and we had an inflection point up here where we could have gone up and retested the high, and we came down, and then I said this was likely, on the bigger picture, an overall bull flag forming. Now we're getting down to that flag support. I was saying that first this trend line would be a target, then breakdown would be the origin of the megaphone. That got us down to about 99.2. And the target below that is this, ideally, it would be this trend line here, which I've got about the 98 area. And below that, we've got this overall rising megaphone support in the 96 area, which is a target I call after this high in late 2022. So we will see. I'm really liking making that target, and that would be a bull flag. But I would note, and we've seen quite a few examples over the last year, that not all bull flags break up. Some of them break down, and actually they can act. I've talked about these acting in effect as topping patterns sometimes. And I'm wondering if enough pressure goes on the dollar, whether that's going to break straight down, and then we are going to be looking at a full retracement. How far could that go? Well, it's not that long ago that we spent a long time trading between 78 and 97. We took a long time between trading, let's say, between 70 and about 89. If we were to break down from this, let's say, in about the 96 area, then that would have a target in about the 76 area. And that's an area we've been before. We spent a lot of the 90s there. We spent a lot of the 2000s there. And I am thinking we may well be going there. I mean, this double bottom, lovely double bottom here, and normally I would expect to see some sort of a topping pattern here, but we don't always get that. We didn't really get one here, but admittedly, this was the Plaza Accord was an agreement to take down the value of the dollar. It was remarkably successful, as you can see, but maybe that just didn't have time on this side. But normally, nice looking double bottom there, decent looking double top there, decent looking double bottom here. I was leaning towards seeing a double bottom, but it could be we're going to see a breakdown faster than that. In which case, well, as I said, the target would be down about the 75, 76 area, and we could see a move down to the support area in the 70 to 75 area. That's what we could be looking at here. What would that be in terms of where the dollar is now? Be another 25% off. And it's not so long ago, in terms of this chart, that we were trading there, and it wasn't the first time we'd been trading there. So I am wondering about that. We will see. I'm not convinced that's going to happen, but what I would say is that if people start selling out of bonds because they're losing confidence in those, then that's going to take the dollar down. Because people would be basically selling dollars and buying other things, and that's the kind of thing that does sell the dollar down. Now, this is one reason why being the reserve currency keeps your currency up, because obviously people buy your currency, they sell other things against it. That keeps it up artificially because there's a lot of interest in people keeping assets in it. If they lose confidence and start selling that out there and finding alternatives, then at that stage, obviously, your currency comes down, and really, it can come down quite a lot. We shall see how that goes. All right, let's have a look at CL. CL, we've got a possible IHS here. Now, the question is, are we why did dollar come down so much? Well, two reasons. One, Saudi started producing more oil and aiming to take down the price a bit. And the second reason was that there was an expectation that the US was far more likely to go into recession, something which I think is probably likely in any case. Although obviously, if we do see interest rates sort of spike up to 8 or 10%, then that could obviously be a very deep recession. But in the meantime, this is rallying really on the expectation that recession fears are receding, because, of course, in recessions, the demand for things like oil goes down. Sorry. And lumber, of course, for building, and copper for making, well, everything. It's so this is very, very linked to economic activity, and in the event that we go into recession, this chances are would go down. I think we could be looking at a breakdown here, but this IHS has a shot. If we see a sustained break up over 63, we would be looking at a target in about the 71 area. I'm skeptical about it getting that far, but I would say the backtest of the monthly period at 69.39 wouldn't be that far away from that. NG, I'm still thinking this might be a bull flag, but I have to say it's looking less pretty by the day. We will see, but it does look as though it might be trying to bottom out here. If it succeeds, then this could head up and back into this target area in the 4.9 area. Looking at the bigger picture. Right, looking at CL, looking at WTech, we've seen I had a nice looking wedge here, and this tariff stuff basically broke it through and got it down to 55. I think this might be a breakdown. I don't have an obvious alternative trend line in this situation, and I'm wondering whether this is the start of an extended breakdown. Now, that's not great news for the economy. Very good news for Ukraine, though, because actually, if oil comes down to this level and stays there, it brings the bankruptcy of the Russian government, which is already on pretty shaky ground, a great deal closer. Looking at the bigger picture, I was looking at this as a potential double bottom. But at the moment, we've gone significantly below that. It could still just about be a double bottom, but I would say I've got an obvious trend line if we go lower, and I've got that in about the 48 area at the moment. Looking at natural gas, we've got a breakdown below the rising support trend line, and we've got a head and shoulders, I think is probably the better read, and that's got a target in about the 3 to 3.1 area. Could it make it? Yes. Do I have any positive divergence here? Not yet, but we would do if we saw a retest of this low here and it held. But I am thinking it might make it. On the bigger picture, though, we've got a very nice looking double bottom, which is broken up with a target in the 5.75 to 6.25 area. And I've got to say, that 5.75 is very close to an important Fibonacci target. I quite like that. But again, there's an element of economic activity in natural gas. So in the event that it looks like we're going into recession, I think the chances are the US is going into recession, very possibly a number of other economies as well, then at that stage you would expect reduced demand on gas as well. All right, great. Let's have a look at GC. GC heading higher here. Now, US Treasuries weren't really acting as a good flight to safety last week. Gold was. And actually has made new highs. I haven't got any obvious targets above. I don't have any current patterns or trend lines. We've gone through all the trend lines I had. So really, I'm waiting to see when we find resistance and whether I start building up some new patterns. So at the moment, though, it's got up to new highs, and I'm thinking it goes considerably higher. SI is industrial, palladium, platinum, both industrial as well. Wondering more about this. I've got a little bit of negative divergence here. I am wondering if we might see a retrace here, and we could see one on gold as well. HG, copper, if we're going into recession in the US, is going to suffer. So we've already come down a lot from the top. I was saying this might be a significant high here because, Dr. Copper is called Dr. Copper because it's very sensitive to economic activity. So we've seen a big retrace here. We're seeing a bit of a rally. After that, I'm expecting to see more downside. All right, let's have a look at metals. And on gold, we've got no obvious resistance above. We've gone through every trend line. And we had a lot of pretty decent looking ones, and we've gone through them all. We've got some negative divergence here, but I have to say we're about to lose some monthly divergence if we close the end of the month anywhere near this area. And it could be that the rest of the divergence goes as well. At the moment, I have no obvious area where this might finish. And I have to say, if we do start running, if US Treasuries start running into serious trouble, gold is one of the obvious beneficiaries of that and would likely be helped. Looking at silver, still looks like a bull flag forming, to be honest. I don't have a decent trend line on it, but my lean would be just looking at the chart that we've probably got a retest of 34.86 coming. On the bigger picture chart, I have a trend line just above that. On the even bigger picture chart, I've got another trend line up in the 38 area, which is the one I'd really like to see made. We will see how that goes. We don't have any meaningful negative divergence here, but then this has been very, very weak compared to gold. We've still seen a decent move on it, but by no means anything like what we've really seen on gold in terms of what we'd normally expect the relationship between the two to be. In terms of palladium, palladium is dirt cheap, really, at these prices, in my view. I am thinking we might see a retest of this low here at 808, but I am thinking that if we are seeing a move away from too much dependence on the US as a reserve currency and in treasuries as a store of value, then a number of these metals may well benefit. I'll be talking about that in a post in the next day or two, but palladium is one of the ones which should look most attractive. Platinum. which has been in a very, very long consolidation here, would also look pretty attractive. And if you have a look at that on the bigger picture chart, let's just have a look at the monthly chart. Hang on. Fill the chart, I think. Update. Again, by historical standards, this isn't expensive. Not at all. Is there a reason for it to go back to new all-time highs now? Not particularly. But if people are looking around for metals to act as a store of value, well, I've got to say platinum's got to be one on the list. We will see. All right, looking at copper. Copper, we've seen a sharp move down. We've got a nice looking double top here, and I'm wondering if we were going to see a breakdown, which could take copper a lot lower. Overall, I've got a rising wedge here, and we're getting pretty close to a test of the rising support, which I've got in the 3.95 area. Looking at HG, no current divergence, seeing a bit of a rally here. If we saw a retest of the low and then a rejection then we could get a buy signal here on the daily chart, but I'm not really expecting to see one. One thing to note on GDX and GDXJ is we haven't actually made the full target on either of these, but we've seen nice breaks up. I'm expanding the charts that I'm using from the old ones I was using at Archer Chart. I'm going to be adding weekly and monthly months on GDXJ and bring them up to date. I'm adding 4 or 5 charts a week, so I've been doing the longer term Forex ones recently. But I'm going to be adding these because there are bigger picture targets up from this. GDXJ, I think 60 was a pretty important area, and we've been significantly higher than that before. I'd like to start looking at the longer term on those, but I'm going to be adding those over the next few weeks. It's obviously it takes quite a while to do each one. So I add them slowly. GDXJ, we've still got an open sell signal. This one came very close to the possible near miss target though, so I might be inclined to call that. But again, nice break up. Hard to know where that will end. Much of it, some of it at least, depends on the reaction to this trade war that Trump has started. And how many people either want to retaliate against the US by selling US assets, or just lose confidence in the US and sell US assets. So we will see. All right, looking at KC, this still looks like a bull flag. In fact, actually having rolled this and sugar and cocoa and cotton into July this weekend, this flag looks rather better than it did before. I'm liking this. We've got a possible IHS here, sustained break up over the 360 area. We'd be looking for a target about the 395 area. This could see a break up, and in which case could give us a nice looking retest of 416, at which point I'd be thinking it might be the time to look for a high, and potentially a fairly sizable top, because by historical standards, coffee's fairly stretched. Sugar, on the other hand, could go down considerably from here. I'll talk to you more about that on the bigger picture chart, but there is a lot of available downside here. And if we see a hard breakdown, then I've got targets considerably below on a big head and shoulders, because this is all a possible right shoulder. For a huge head and shoulders on my bigger picture chart. On CC, nice looking double bottom here, hasn't broken up yet, but it yet might. ZW, nice looking rally, still looks a bit like a bear flag. Corn, this doesn't look like a bear flag, and we've had a very nice move up. Double bottom has broken up with a target in the 513 area. On soy, slightly unlikely seeming rally here, given that I think that at least half of American soy gets sold to China. And that's all being tariffed now at 120% or something. It's a lot. So I'm a bit surprised this has rallied so much. I'm skeptical about it continuing much longer. We will see how it goes from here, but I wouldn't be surprised to see this reverse. No current negative divergence at the moment. CT, we've got nice looking little rising wedge here. We've got a decent looking overall double bottom. Bigger picture chart's not telling me a lot, but I am wondering about a move up from here. On lumber, we've got a potential little double bottom here, and I'm waiting to see if that'll lure and potentially give us a retest here. I think there's likely to be at minimum a decent slowdown in economic activity, and of course Canadian lumber is getting attacked by the Trump administration. I'm skeptical about this getting much higher. I could be mistaken, but I don't think this double bottom's not much chance of playing out. Live cattle, we've got a double top that broke down and made target, and it looks like it might be forming an IHS to go back up again. Wouldn't be that surprised to see that, and lean hogs again might be bottoming out here. I've got a little double bottom target, which is really in the monthly pivot area at 95.66, and if this can see a break over it, then this could go considerably higher. Okay, let's have a look at the bigger picture charts on those. Now, coffee, when I'm saying it's at historic highs, well, this is part of what I'm saying. If you go back further, you'll see that actually the price looks more like this area than anything resembling this area. So we're at very high levels by historical standards, and I think it may well be going down. Don't know what impact that's going to have on coffee, but the tariffs. But I do know that a lot of tariffs have gone on coffee producing countries for no obvious reason, given that America can't really produce it. But then penguins aren't much of an economic threat either, and they got tariffed, as well as a US base. So, what the hell? Okay, dairy. On the daily chart, no current positive divergence. Could still get some on a retest of the low, but I'm thinking overall this looks like a bull flag, as I was showing on the other chart. Sugar. This is the possible head and shoulders, which is forming on the much bigger picture chart. Now it's a little apocalyptic. It would actually have a target down about the 0.05 area. Which is down here. I'm skeptical about getting that low, but I'm thinking it could go significantly lower than where it is now. Sugar, RSI 14 sell signals reached the possible near miss target. Waiting to see. This could be a double bottom area. We could see a move up from here, but I'm looking at the bigger picture chart, and I'm wary. Looking at cocoa, could this be a flag? Not really. The flag would really need to come from here, and it's just too large for it. But I'm wondering if we might see another retest this high. Wouldn't altogether surprise me to see this breakdown though. On wheat, nice little rally here. We've managed to get over the daily middle band, which has been resistance for a while. We'll see how it goes. No real targets or divergence here. On corn, nice looking double bottom, which is broken up, leading towards seeing a retest of this high here at 504.50. On soy, it's actually managed to break over resistance the last couple of days. I'm surprised about that, and I'm skeptical about it getting much further, just because it's really America's a big producer of soy, and the majority of its soy it sells to China. Now, are there other markets? Sure, but it takes a while to set those up. So, and China is already, I think, making arrangements with Brazil to buy this from there. So I'm very skeptical about this going much higher. On cotton, not a lot to say about cotton. So mainly because stock charts have stopped supporting the Wayne ones I was using, and these ones are far inferior. It's on lumber. We've got a possible overall double top, which is broken down with the target in the 510 to 520 area. Given what is likely to happen to lumber demand over the next few months and what's already happened in terms of trade wars, I wouldn't be surprised to see this make that target. So we will see. All right, great. In that case, I think that's a wrap. So I will catch you guys again on Wednesday, and have a look out for. I'll be doing a series of 3 posts on the blog, on the Bigger Picture blog, on US dollar, on bonds, and on the US as a reserve currency, and why it might move from being basically the main reserve currency to one of a basket of reserve currencies. So I'll be doing that over the next couple of days. I'm doing 1 post tonight, 1 post tomorrow, and 1 post on Tuesday. So watch out for those. And we'll see what happens next week. I'm cautiously optimistic for next week. I don't think we saw anything which is much resembles long-term market-changing good news. But I think we are very well due a relief rally. This is a perfect opportunity to see it. I'm skeptical about it just heading straight up from here. Although I would say that SPX particularly really likes its double tops. Could we go back and retest the high? Potentially, but I think people would need to get very enthusiastic, possibly with some more good news. We will see. All right, anyway, take care. I'll catch you again on Wednesday, and look out for those posts.